Okay, so I got a question because I'm a nosy guy, and then we're going to get started here. Where are some of you from?
I'm from
I'm from
Miami.
Alaska.
I'm in Orlando.
South Carolina.
Originally from Argentina.
Hi, this is Pat Walker at Mission Winners. And there was an older woman at the registration desk, and she says, well, she was real kind of hardcore and stuff like this. And she said, and this is exactly how it was. Before I can let you in, I will need to see some identification from you. And I leaned across the desk and I said, ma'am, I'm in the witness protection program. I can't divulge that. And she goes like this, are you really?
Oh, we should get started. Over in the chat, we've got folks from Sarasota, Florida, Saskatchewan, Alaska chimed in, I heard earlier, West LA, Dublin, Ireland, New York, Chicago, Dallas.
That's cool.
Quantico, Santa Cruz, Clemson, South Carolina. Awesome deal. California, Orlando.
What are we going to talk about here? We're talking about the stock market, and we're going to show some charts today and things like this. And most of you know these foundations, but I got to bring them up. And I'm going to start with a question. And it's a brutally blunt question. And I'd like to see a show of hands here. Has anybody ever bought a stock and seen it gone up, 5, 10, 15 points, and think, man, this is a kick, profit. I'm locking that profit and I'm taking it. And the stock keeps going up and you never find a place to get back in. Anybody, that ever happened to you? I'm raising my hand. Okay. Yeah. Big time. I will tell you, it frustrates the living tar out of me. It used to drive me nuts. And most of you know this. I'm grateful. I'm married and I have 4 kids. I had 4 kids in private Christian schools at the same time. We had to make it happen. My wife was a stay-at-home mom, all right, raising 4 kids, and I'm grateful for her. I love her. So it was the idea of, Pat, it's a pressure cooker. So it's like, man, I got to make money this week. Geez, I got to make money this week. We got bills to pay. We got tuition to pay. I got to get, and that's like, good, I got it. I'm selling. And the stock keeps going up and I never get back in it. So I learned something through a lot of hard work, a lot of lost sleep. We talk about maximizing gains. That's the big theme of this webinar. And that's why I am really hung up on this. When we buy something and it starts to go up, if it's a decent move, we will sell some into strength. And you can say, wait, you're limiting profits. Yes, that's true. However, it does something else because I don't know the future. All right. Anybody who says they do is a liar. All right. But I do know this. If I take a little bit off, 20%, I've guaranteed myself a profit. I can let those other shares fall all the way back down to my price, and I still made money. So knowing this, and again, I have a degree in psychology that relates to all this and stress. Okay. I've studied stress a lot. Is when we've taken some profit off, it allows us to let other shares, remaining shares, work much longer. Why? Because no matter what happens, you're going to make money. So if you remember one thing today, remember that. And I'm speaking from my heart. But please, flip that coin. Somebody says, well, then you know what I'm going to do? Anytime I have a good profit, I'll just sell it all. Man, this is awesome. That's going to drive you nuts. That will drive you crazy. You know why? As I said, you won't find you can't find a spot to get back in it. So then you know what you do? And I've done this too. I've broken all the dang rules. You capitulate, said, the heck with it. I bought it for 20. It's 27. I sold it. Oh man, it's 29 now. God, I think this thing's going to go up. I buy it. So I buy it at 29 bucks. And I buy the top and it starts to fall. And then what have I done? I've messed myself financially. I've hurt myself financially, but I've also hurt myself emotionally because I didn't let the market beat me. I beat myself much longer. I've had stocks. I don't even have them on my front page. You can say, what? Not even watch them. Why? You know why? Because I'll screw up. Just let them work. Now, do I have a limit alert set? Yes, I always have a limit alert set, but I'm going to show you something here, like right here. We'll do this one. You all know it. Here's my limit alerts, a lower alert and an upper alert. We own it down here. So now let's get into the next part of this, maximizing profits. The first thing we have to do is we have to focus on clean and simple chart patterns, and you all know it. And if, by the way, I'm going to say something here right now. I'm looking at the room. If I say something and you don't know what I mean, do me a favor. Just, you're not going to be rude, and I don't want to be real disruptive with this. Just, oh, Pat, I'm not sure what you mean. Okay. For those of you that don't know this, before I did this, I taught on the university level. I taught advanced level strategic planning classes. My final was 24 pages typed. And I didn't do it because I was a jerk. I did it because I wanted the people to know the information. It's the same thing here. I lay a lot of stuff out, not to be a jerk, but I really want you to know it. If we have to give it a lot of room to prove that we're wrong, we're going to give back too much. I will also share this with you. Bill O'Neill, he talks about limiting losses at 7 to 8%, but he says off the record, he prefers closer to 3%. 3%. And you can say, oh, really? Yeah, I've sat down and had lunch with him and talked with him. So one-on-one. So yes. Yeah. So we're really big on clean and simple entries. If it's good above the white line, it's bad below the white line. As long as that sucker's above the white line and that baby's trending like this one is right here, why sell? Why sell? Let it work. We have a couple of rules and tactics that really help us here. This is the 50-day. This is the 21 EMA right here. This is the 8 EMA. Way down here is the 200. All right. The ones we key on, the 21 EMA and the 8 EMA. But there was a guy in this room that I saw earlier. Him and I did a couple of years of work on that. And it really helped me. We were good together. I'm thankful for him. He's a dear friend of mine. Anyway.
Hey, Pat.
So
before you get going here, we do have, I just wanted to bring you back to, we were going to talk a little bit about someone getting into the business, someone getting into this as a relatively new person.
yes.
And we have someone who's going to talk here just a little bit. I just wanted to see if now would be a good time to do that before we get too far.
That would be awesome for everybody. Awesome. Let's do it, Owen. Bring it on.
All right.
Thank you.
Tim, were you able to unmute your mic?
Yes, I am. Can you hear me okay?
Oh, hey, Tim, how you doing?
Hey, Tim.
Hey, I'm good.
Good. Just tell us, if you would, just a little bit about yourself and some of your trials and some of the things that you shared with me in your email.
Yeah, I sent an email to Pat and to Owen probably about a week ago or so, and I just finished closing out 2020 and looking at all the numbers and everything, and I had by far the best year that I've ever had before, and it was a big thanks to them and a big thanks to Pat. But it's and when I was sharing with them, it's been a struggle. Like the last about 4 or 5 years ago, I realized that I needed to start fostering this passion that I have for the markets and really taking it serious rather than just trading here and there or reading a book once a year or something. If I was going to actually make something happen, like I had to really jump into it. And so it kind of started a journey for me going through, a lot of the books that people tend to focus on. But when I came across how to make money in stocks and CanSlim and then everything through Investors Business Daily, I just started immersing myself into it. And then about 2 years ago, I really kicked it into high gear. It's become an absolute, I'm type A personality also. So I think, Pat, you kind of get what I'm saying. You know where it comes from, where you're like, is this an obsession or is this healthy? What is this? And so what I did is I basically read everything that had to do with growth and trend investing and focused on it 100%. And my commute to work, I'm a detective out here in California. And so I got about a 30-minute commute each direction. That was all podcasts, usually IBD related authors and whatnot. The books that I was reading on my lunch break, I would skip my lunch break to go out to the car and study. When I had breaks at work or I had weekends where I was getting called in and whatnot, as soon as I got back, I talked to my wife, we'd do our thing. And she was great about supporting me and making sure I had the time to keep studying also. And last year, 2019, I got done, it was probably about October or so, and I've been putting all this effort into it. And I was flat. I don't know if you remember the last part of 2019, but it was a sideways market for a while. And it was hard for me to make money. And I was like, geez, I'm just getting down on myself. And that's when I found Pat. And that's when I signed up for Mission Winners. And everything that I had been studying and working together, like he did just such a good job of showing me how it all tied together. And all of a sudden, instantly, I started making money and the trades started working a lot better. And then, through his guidance and through interacting with him on Twitter, man, it's been such a huge just blessing in my life. It's been awesome to see it start to pay off. But I talked to my wife and I were talking about it last night, and it's hard. Like it's definitely hard, but like once it starts to click, it really does click in a big way. But anyway, yeah, I was super thankful. And so that's why I had reached out to you guys just to let you know, it's like, you can break through and you can make it happen too. And I know I had some moments where I wanted to quit and like took a week off or took 2 weeks off or whatever, but man, just keep getting back into it and paying attention to everything that Pat says and like following his rules religiously and committing to his process has been worth the time and the effort.
That's awesome. Thank you very much, Tim.
Yeah. Tim, that's, I have to tell you, stories like that touch my heart. Mm-hmm. And, and I want everybody to know this. Please don't think like, oh, we reached out. No. Tim volunteered. I was surprised. I just got it, or went to Owen and Owen sent it to me. And I thought, this is great, having that drive and passion and having some rules and foundations. So Tim, I got a question for you, because you're a veteran VIP. All right.
Yeah.
If you had to give specific advice to the VIPs, because you did I saw in your email, you did really well. Okay. I mean, really well. What advice, nuts and bolts it, what advice would you give people, please?
I mean, the adage that we've all read in all the books, cutting your losses short and letting your winners run. It's so easy to say, but when I went back and did case studies on my buys from 2017, 18, 19, it was something that I was saying to myself, but not actually living out on paper. And what that would look like would be kind of like the example you're talking about at the beginning of the stock. Like you buy something, you think you buy it right, it goes up 5-10%, you're excited, and then next thing you know, it squats on you. And you're like, oh crap, it's going to come back. Everything looks good. And the next thing you know, it's down 3, then 4, then 5, then you're at 10%. Or using a poor method for selling out of that. I realized that I was picking a lot of good stocks and a lot of them were going up and I was making good profits on them. But the ones that I was losing my money at was by not really living out the whole cutting your losses short. And I think a turning point, because Pat beats you over the head, right? Like, I mean, every keyless video that comes out, like he's harping on you. He's like, no, this is it. Small losses. We're not taking anything more than small losses. We're selling into, you get the idea, but then living it out and acting on it, I think was probably the one of the biggest challenges. And then I was watching an interview with Jim Ropel this summer, and he's got 3, 4, and 5 taped on paper over top of his computer. Like he's got this, $10,000 computer screen set up, and he's got the numbers 3, 4, and 5 taped over top of his computer screens. And that's because he sells a third at 3% drop, a third at 4% drop, and he hopes to be out of the position by 5. And I'm like, well, Pat keeps it even tighter than that most of the time. And I'm like, so I did the same thing. I taped it up just as a constant reminder. And, I think just being diligent on that is like probably the single biggest thing, because you can't go wrong with a lot of the stocks that Pat's picking. Like he's telling you where the buy points are. They're there. I think for the biggest struggle is just managing it after you get into it.
Good. Excellent. Tim, thank you Thank you for the input. Thank you for volunteering. I appreciate it. You know, just
Yeah.
talking about, just giving some guidance. It really helps. I have to share this again with you, and Tim touched base on it, and it's right, is a lot of times, folks, we're, you know, this webinar is about minimizing drawdown, and that is the biggest, to me, that's a huge part of this game. If you can be the best stock buyer in the world, all right, but if you let your losses run away from you, you're not going to get anywhere. It's so crucial to keep them really small. And Tim touched base on it, the psychology of it. And I have a suggestion for all of you, and I've mentioned it before. One of the best things you can do, actually two things. One, please, if you have a chance, buy Market Wizards by Jack Schwager. Not New Market Wizards, Market Wizards by Jack Schwager. The last chapter is an interview with Dr. Van Tharp, T-H-A-R-P. And what he does for a living, he coached and trained professional investors and traders how to improve their investing results. And one of the things that he found out is, from a psychological perspective, people sabotage themselves. And here's one way how. It happens. And it's happened to me, okay? You buy a stock and it goes up in price. You know, you're up, 5, 10 points, and it comes back down to your price and it starts to fall. Oh, I'd love to see a show of hands on this one. Oh, I've done my homework. This is a leading stock in a leading group, all right? It's going to come back. Just let it work. Just let it work. Did it ever happen to anybody? Yeah, heck yeah. And it's so dang maddening when it keeps dropping and then you're stuck in the frickin' thing, all right? And you have to stare at it every day. So what's the best way to correct that situation? Minimizing losses, run it like a business. If we focus on the really clean and simple base breakouts, and here, let's just do something. Clean and simple, right? I know you've all seen this, but I can't stress it enough. Clean and simple. FCX, clean and simple. NEO, clean and simple, clean and simple, clean and simple, clean and simple. There you go. Tesla, yeah. Right here. It's a shorter base, but it is lifting, and it had volume confirmation through there. Roku, through these tops. There you go. APPS, entries here and here, and it ran up right there. I just have to show you these. Many of you own these stocks. Look at this. From 50 to 70 in a week. That's what we're after. But the point is this. They're simple bases. If we focus on patterns, I'll say it again, that everybody can see, it helps us because other people will buy it too. And it's good above the white line and it's bad below. And by so doing, we can keep our losses much, much smaller. And that does two things. It protects emotional capital and it protects financial capital. And have I ever gotten hurt real bad? Oh, yeah. Have I gotten to the point where I have tears in my eyes? Oh, yeah. I've gotten kicked bad. I had a MasterCard trade go wrong on me about 20 years ago, and I lost $12,000 in about 5 seconds. That's stupid. So learn from my mistakes. Don't do that. Control your risk. By so doing that, you will minimize your losses, always. I'm going to flip that coin though too. And I know I harp on this a lot. There's a maxim on Wall Street. You'll never go broke taking a profit. Say it again. That's a lie. If your losses are bigger than your profits, you'll go broke. So it's crucial that when you get a winner, you have to let it ride. And it took me a long time. And you could say, what do you mean, months? No, years of finding a method of letting it trend for me. And what was it? The 8-period exponential moving average. Ed Sakota did a tremendous amount of work on the 5. A lot of people talk about the 10-period simple. There's a guy that was in this room a while ago and myself worked on it for a couple of years. The 8-period exponential movement, we developed, you say, oh, did you just develop this? Heck no, I developed this back in like 1999, 2000. Okay. We used it. And then we didn't talk about it. Other people started using it. So I can't stress that enough. Now, Tim also said something else very important, and I have to share it with you. And this really helped me. My goal here, folks, I will tell you this, is to help you. I know how frustrating it can be. Here's another great tactic that will really help you, is on every stock you buy, print out the chart and mark it up. Mark up where you bought it and why you bought it, what was going on in the market, and what were the fundamentals in the stock. Put it on the paper. Save it. I mean, I save stuff. I remember when we moved about 4 years ago, we moved from one house over. My wife was like just shaking her head. I mean, I had boxes of charts that I had saved, that I had marked up from 20 years before. So here's the true confession for you. When you have a winner, print it out and mark it up. What was the market doing at the time? What were the fundamentals? Where did you buy it? Why did you buy it there? What were you looking for? But then do this. True confession. You know, we're talking about maximizing gains and minimizing losses. True confession. Do this. Mark up the spots where you sold it and why. You can't lie to yourself. You can lie to everybody else, but you're going to look at yourself in the mirror and you will start seeing something that's very profound. You're going to start seeing what you're doing right, but you know what else? You're going to start seeing what you're doing wrong. And it's going to hurt, but it will make you better. I don't mean that as a pep talk. In fact, it may actually hurt some of you. But if it helps you, then I've done a good thing. Print them out. Mark them up. That is a great, great tactic. And again, it really, really helped me. And you all, most of you know me really well. I mean, I see some of the names in here, which I think is awesome. I can't stress how important it is to control risk. Many of you are newer, and I'll share this story with you. 20 years ago, I had a friend of mine who managed and traded my account when I was out in the South Dakota, in the Black Hills of South Dakota. This is before the internet, okay? We didn't really have any connection. Where I was, there was nothing out there, all right? I was up in the mountains, near Mount Rushmore. And my account at that time was valued at $600,000. And everything was great. I let him handle it. And I came home on a Sunday after being gone a couple of weeks, and I logged into my account, and it was worth $400,000. I lost $200,000, and I didn't know it. I sat at my desk and cried. And you can say, what's the big deal? Folks, you got to remember, money was flying out of the account paying bills with the kids and a mortgage and taxes. And I talked to him. I said, what happened? And I'm keeping this clean, okay? Because there were words. There were serious words. What happened? And he said, Pat, he said, I'll keep it clean. He goes, this is all a crock of you know what. He said, I'm telling you what. He goes, these are good stocks. He goes, they're going to come back. They're going to come back. And I'm like, why didn't you sell? Why didn't you sell? And he says, because they're good companies. That's why. I said, man, I'm not going to use his name. I said, man, we can't do that. We can't do that. So there's a moral to that story. Limit losses. And you can say, boy, Patrick, you sound negative. No, I'm the eternal optimist. Our big gains are in front of us, but they all don't work out. So if I can keep my loss really small and have big gains, life's good. And again, case in point, this right here. This is huge. This stock has been a game changer for us. In fact, I don't know if he's in this room. and I'm not going to use his name, but he's a VIP. He didn't have a big account. Okay. He made on Tesla last year. And you can say, what do you mean not have a big account? I think his account was like maybe a $150,000, $200,000 account. He made on Tesla last year $300,000 by just following the rules and making sure to control risk. So we do that and it works. So print out the charts and study them. That will really help you. And as another point, as I said, with Market Wizards, read the interview with Dr. Van Tharp at the end of the book. It's a great book. It will improve your life. Talking about what's up here to maximize profits and limit losses. Because you know what we do? We sabotage ourselves all the time. And I have been guilty of it. I know what it's like. So what's the best thing to do? As I said, control losses. That's where I'm coming from with this. Now, let's go further here. Focus, as I said before, please. And I know you can say, Patrick, you're repeating yourself. Yes. Why? Because there's certain things that are foundations that need to be said and heard over and over and over so that you own the concepts. You own them. They're part of who you are. By the way, I don't have a script in front of me. I got a couple of notes here on a couple of things I want to say. I don't have a script in front of me. All right. I'm just speaking from my heart on I know what works. All right. So we know this statistical fact. And I periodically taught advanced statistics on a university level also. Okay. So I'm a numbers guy. Okay, Owen, you want to hit us with some questions?
Yeah. Kate wants to know about selling into strength. Do you have a specific rule about selling into strength? Like, does it need to rise so much before you do it, or do you do it on technicals? How do you decide where to sell it and how much to sell?
Great question. I will not sell all of it. Never. First foundation. Don't do that to yourself. You'll sabotage yourself. Nothing's more maddening than selling a stock and have it keep going up and you're going, God, I'm out of it. Now what the heck do I do? So I will sell off after a stock is extended from a pivot price or a clean and simple base, and it starts to show some stalling action. All right. Like right here in this recent base right here, there was no reason to sell it. It's just working. This was from last year. Now, right here, there's really no clean entry, but I know I can find some, and we're going to try to do it real quick here. What do you say? Hopefully this is still good. We locked some in. By the way, this is a current one. We're in this. It runs up. I'll ask you, I want you to look at this chart. Two things we always look at is price and volume. This stock's going up. As it's advancing in here, what's happening to the volume? It's dropping off. What does that tell us? It tells us that there's less buying pressure in the stock right here. Two bars right here. And then it starts to roll over. When it starts to do that, what do? We'll sell some off. How much? Normally, this is what I do. This is my normal operation. I would say 95% of the time, I sell it off 20%. I'll sell off just 20%. If it keeps falling, I'll sell off another 20%. And I will try to stick with that. And it works. It works wonderfully. Okay. And here's why. Something I know. I'm not going to get the top. All right. I'm not going to get the top, but I know I will make money. By guaranteeing myself a profit by selling that first lot, it allows me to let the other shares run much longer. DraftKings, right here, runs up, comes down to the 8-day, everything's great, lifts off again. You see that bar right there? Tell me about that bar right there. It gaps up, it runs up and reverses down on a pickup in volume. There was selling in there. Yeah, we sold some. I'll slide this over. This top bar right here. These are some great tactics. This is the real world. You see this bar right here? You can say, man, that's awesome. It's hitting all-time highs. What's the negative with the price and volume on that bar right there? Any Ernesto, there you go. Good, good, good. Right here, folks, it ran up and hit new highs, but note the volume drop off. Look at that. That's a negative. And then on this bar, it drops on a pickup in volume. Okay? That's a sell. We're selling it off in smaller increments. Here it gaps down. Look at the volume on that bar. We sold. We sell them off. No day trading. We manage them. They tell us what to do. I'm going to keep on going here. IIPR from a long time ago. No, we won't even do that one. Jazz, that was way back when. Oh, here's JD. JD. This is recent. This is this year. Look at that move, that breakout. And it ran up and everything was strong, right? Beautiful. And then it gaps down. When I see this big gap down, by Jove, I am not going to let a good profit turn into a loss. So on that big gap down, I'm selling some. If it keeps falling, you know the rule, folks, because you've heard me say, you won't catch me in a lie. Starts to fall below this buy price or approach where it got it, I'm not going to let a good gain turn into a loss. It's sold 1/2 and 1/2 and it was gone. And guess what? We made money. And I'm not bragging, okay? That's a lame game. But we made money. Why? Why do we make money? Or how did we make money? Because we had tactics. Sell some into strength. Don't let a good gain turn into a loss. If we held on, guess what? Down here, you're down $4. And instead, we made money. IIPR from a long time ago. Lee Automotive. No, that's too new. Micron, that's an older one. That's an older one. Let's get something new. What do you say? Let's look at these. Here we go. Williams-Sonoma. This is today. Many of you own this. And you can see right here, the buy right there. This is the real world. Again, folks, this is January 12th. Lifting through this top, closing, and we bought more. We bought 20% more, and then it was closing really strong, and we bought 20% more. This is the daily. Okay, so I'm going to ask all of you, what time frame am I going to look at next on this chart? Anybody?
30-minute or hourly.
Right on. Who said that? Who was it?
Tim
Yeah,
said that.
here you go. I love it. Good deal. Oh, by the way, I wasn't trying to put you on the spot, but I was just like, yeah, y'all are getting it. I make videos on this all the time. All right. Just to help people. By the way, the vast majority of videos I make are for the VIPs, right? Y'all know that. So looks great. Hourly. Look at that volume pickup. And I like to do this. So here's, yesterday and we'll just see what happens. Oh, look at that. It lifted through that white line. And boy, look at the volume pickup. What does that tell us? Buy it. Don't buy here. Buy up. Buy it. Pushing through this line, pushing up. This is the hourly chart. Take it down to 30-minute. Look at that. Look at that volume pickup. That's good. And then it closes strong on a good volume pickup. It's a nice long base. We buy more. 20% more buy. There you go. That's the real world, and that's real time. That's today. We'll do a couple more. CrowdStrike bought, and it's lifting up, and it's paying back. Now, look at this. I'm going to enlarge this for you. I have price alerts set up and down. I'm going to drop this one a little bit. Look at this. Tomorrow, if this takes out the lows, you see that little red hash mark? Takes that out. What do? Sell some. Why? I don't want a gain to turn into a loss.
Yeah, let me ask you, Pat, because Eric's asking, and so let's jump ahead here a little bit. How do you decide where to put those alerts? You've got up alerts and down alerts. Where do you make determinations on where they go?
Oh, good question. On this right here, as the day progresses and it starts to tail off, I'll just put an up alert just a little bit below the highs of the day. The down alert, because it gap, you see where it gapped down this morning, or it opened down a little bit? Watch this. We'll do the real world. Right here, basically was corresponding with right there. I'll slide it over a little bit more for you. Right there. There's the line for the day. So what does that tell me? I got a lower alert set just in case. And here we go. Here's the daily again. So there's my line, and you can see the line. I'll get rid of it now because I don't want to muddy it up. But if this stock tomorrow takes out the lows of today, I will be concerned. Why? Why will I be concerned? Because we don't have much of a price cushion. So we'll have to monitor it to make sure that we don't let a good profit turn into a loss. I don't want that. After they push away, I'll give them a lot of room. But when they're close to our price, we monitor them closely so that we don't let it, oh, let's just give it away. And all of a sudden the thing keeps down. And it's like, I'm down 10 points. I don't want to do that to myself. Here we go. Williams-Sonoma, right there, pushing through. Oh, real world. You know this. You all know this one. We hashed through it already. Uber. Why do we buy more? Any takers on that? We bought it, pushing through that line. Why buy more?
Closed on the top end. That's why. Finished on the top end of the candle.
Perfect. Excellent. Well done. And if we were looking at that, your answer is correct, by the way. Looking at that, what would we look at into the close to know if we should buy more or not?
Like higher volume.
Thank you. Right here, it's all right. Right here, a little bit of selling, but still strength overall, especially on, this is why I look at these, but I lean on the daily. That's a good close. Picked it up. We'll see what happens. And here's the beautiful thing, folks. Think about this. You bought right down here. You added, but just 20% more. So the average price is still low. This stock could fall all the way down to that red line, all the way down to here, and you still made money, which leads to a great point about maximizing profits and minimizing losses. Please, cardinal rule, if you buy X number of shares, and I'm going to give you a number. Let's suppose you buy 100 shares and it starts to go up in price. Rules of proper pyramiding. Do not buy 100 more shares. Don't do it. Never. Why? You pull your average price up too high. Rules of proper pyramiding. This is all canceling level 3 and level 4, and I've been there. All right. We'll start with, they talk about starting with 50 shares, buying 30 more, buy 20 more, and get up to 100 shares. Always factor that thought process into your buying equations and tactics, and it'll keep you safe. It'll help you make money, but it helps control risk. We're talking about maximizing gains and minimizing losses. That's how you do it. And it's the real world, and it allows you to sleep at night. So, okay, hit me with another question, Owen.
Yeah, as long as we're talking about stocks that are going up, what do you mean? Evelyn wants to know, what do you mean by let it ride the 8? Do you mean as long as the stock's above the 8, you let it go? And when it falls beneath, you sell some? Or how do you
Great
use that
question.
EMA?
Yeah, here's the 8. It's a great question. The yellow line is the 8-period exponential moving average. And when we have a good trend, we will let it ride that moving average as long as possible. After it's moved up quite a bit, we can give it all the way down to the 21 EMA. If it's really grinding up, we can give that sucker all the way down to the 50-day. Case in point, look at Tesla. Look at how Tesla is walking here. Just walking up the 8, walking above the rising 21 EMA. That's beautiful. So the 8 is this. And I have to stress something for you. Be really specific. It's the 50-day simple, it's the 21 exponential, and it's the 8-period exponential moving average. Now, if you have a different moving average that you're happy with, that's fine. Whatever's good. But I found this works really well for me, and I've used it forever. I mean, I've used these moving averages, dagnabbit, 20 years. 20 years. Okay, Owen, hit me with another one. I want to answer these questions because that's the right thing to do.
All right, let me switch back over there for a second. There we go. So let's go back to Williams-Sonoma for just a second.
Sure.
And Why is it when you bought that, and that's a pretty good sized bar, why is it that you didn't sell some into strength on that bar at the top? Why did you buy more instead of selling some into strength?
Great question. Great question. Two reasons why. Number one, the market was closing good. See that? That's the spiders closing fairly strong. So I can live with that. All right. Close near the top half of its range. So there's strength, and it was bouncing off the 8-period moving average. The other reason, going back to the chart of the stock itself, it's closing right near the highs of the day. Oftentimes, when it closes strong like that, it found like right here, closes strong. The next day, it gaps up. All right. Closes strong. Now that's unusual. Okay. That's probably earnings. All right. But frequently, when the stock closes strong, it'll follow through. Now here it opened and it gapped down, but then it followed through. Close strong. It'll follow through the next day. Charts have personalities. Right here, closes fairly strong, gaps up the next day. This is even better because it's coming out of a longer base. And there's another variable to consider. The market's acting decent too. So I combine both of those things together and say, hey, that's a buy. Let's buy more. But notice, we didn't double down, just 20% more. What does that allow us to do? Not pull our average price up too much. I love that. That's why we do it. And it works. It works. So anyway, hit me with another one, sir.
So are you talking about you take profits more readily depending on the market environment?
Yes, definitely. If the market's acting better, and it's picked up here, I don't think we can deny that. I give it a lot more room. I'll give it a lot more room. But I'll also temper with this statement. I will never let a good profit turn into a loss. You see Williams-Sonoma right here? If this thing starts to drop tomorrow, we're going to sell some. We're going to sell some quickly to lock in a profit. And we're not going to lose on our last shares. I'm not going to let a good gain turn into a loss. I won't do it. And you can say, why are you so ingrained in that? You know, when you got $10,000 a month going out for bills and tuition, you get pretty violent and you get pretty tough and you get pretty regimented in what you do. And that's what it was. And that was before taxes. So anyway, but hey, you know what? I'm very grateful because great kids, great grandkids. So I'm thankful. Hit me with another one, sir.
Cover briefly just position sizing. Say you got an account with 25 grand in it. How would you position size?
Great question. I'll repeat that question. Let's suppose you had a $25,000 account. This is what I would do. Take your account and divide it by, in this instance, divide it by, I'm going to say 6. Okay? Divide it by 6. So the maximum amount that you're going to put in any stock is a little over $4,000, right? And here's what you do. The real world. So now you have, and by the way, we're not going to talk about margin here. Okay. Let's do simple with, let's just do cash accounts. All right. We can talk about margin some other time. What do? So you've got $6,000, all right, to put into a stock. Take it, and your first buy would be $3,000. $3,000. As it progresses in price, your next buy would be $2,000. And then your next price would be $1,000. By so doing, you've got money that has pyramided in properly. And the beautiful part of this tactic is this. If it doesn't go up in price, you don't buy more. And what does that do? That means it controls risk. It minimizes risk, which helps you keep your losses smaller. The stock has to, quote unquote, earn it for us to buy more. And if it doesn't, we don't buy more. That worked great. I love it. And again, that's CanSlim level 3 and level 4. And that I'm real stringent about that. I'm really sticking with that. If that sucker ain't going up in price, I'm not buying more, which leads to another point. This is for everybody. Say it again. Don't ever average down. Don't do it. You're wrong. Why compound it? You're already wrong. Don't compound that issue by being more wrong. Don't do it. You'll be better for it. You'll live longer. So anyway, hit me with another one, Owen.
All right. Ernesto wants to know, you got a new buy and it's failing and it reverses. How do you manage it? And then let's dovetail that into Evelyn's question, which is, how do you sell some of that position, but maybe not all the positions, so that you're not completely out.
Okay.
Okay. We've all seen them, right? We buy them, they drop, we get out, then they turn around and go right back up again.
Exactly. What I have found through the years is one of the best tactics for all of us is this, and it really does work. If you buy at the right spot on the weekly and or the daily or the hourly or the 30-minute, you will see a volume surge through that pivot price. And there's a reason why. This is why I'm so hung up on the clean and simple, folks. I'm looking for chart patterns that everybody can see. I want a sixth grader to look at it and say, oh boy, I guess it's good above that line. I could draw that with a crayon. And I know you can say, oh, that's corny and cliche. No, the cleaner and simpler it is, the more people will see it. The more people that will see it, the greater the potential is, or the odds, we'll use that word, the greater the odds that they'll buy too. And isn't that what we want? That's why I'm really big on the simple entries. It works. Now, does it work every time? Like we said before, no, it doesn't. So what do? If it's good above this line, it's bad below. And you think I'm going to give that sucker 7%? Ain't no way. Why? Because I can document, and I bet some of you can too. In fact, I'm confident some of the people I'm looking at right now know exactly what I'm talking about because you've been doing this a while. And Tim's probably one of them, is my bet, is pushing through that line. You've seen them, and they just go. Right? They just go. And if they don't, they turn to it. Do you want to add something to that, Tim?
No, I just, well, I mean, kind of. I think when I first started with you, I heard you say it so many times. And then I started to, especially throughout 2020, there's just been so many different breakouts, but it has taught me to be more patient because the good ones really do go. And it shouldn't be something we have to force. And if you do follow that volume in, it just makes everything else so much easier. Your decision making for when to cut or when to add is there because you bought at the right time. It doesn't mess with your head with a different pivot point than what everybody else is looking at. So yeah, I mean, I think once it breaks through that line and it goes up, especially if you time it right, that's when the least amount of stress is wrapped up in the trade.
Perfect. Thank you for your input, Tim. I appreciate it. I got it, folks. I have to
throw
tell you
this out
something
to everybody now for just a
Yeah.
second, though. I mean, we're talking about, if you folks have anything to say, you want to be on one of these, you want to unmute your mic,
Go
we
for
can
it.
certainly do that. Shoot me an email if you want to, you want to talk on the next one. We're love to have you talk.
Yeah.
Okay. Got one here from Simran. Is that how you pronounce your name, sir? Hey, Pat, look at YALA. You just unmuted your mic. Tell us how you pronounce your name, Simran. You just unmuted your mic. Why don't you ask your question?
That's correct. Yeah,
Go ahead
that's
and
correct. Yeah, so I bought Yala yesterday at 16. Like it broke out from 16 level and went all the way up to like 18.50, like closed on the top. So I sold some around like 18.20. And then, like today it reversed, like market was also selling off at that time. So I sold like some at like 16.30, like when it was falling down. I had my alert set like you do usually. So I sold some, and then like the market was also selling out, so I was watching it closely. And when I see like the market like bounce back, I bought it back like at 17. So it was have, but I think my question is like when a stock, like I know like it went up like 20% or something, so that's why I sold like 50% of my position, so that in case it's reverse, I'm like not losing much, or it came back, I can also add, right? Because but my question is like it happened to me like a lot of time, like the stock like goes up a lot, like 10-20%, and then reverses. So what's the right thing to do, like because I don't know, like it can come like down like all the way like below 16, and like I usually have my stop on that if you look on the chart, like I put my stop at 14, but I sold at like 16 because I don't know, like it's like a really volatile stock, so it can move like it can really go down to like my stop, like, and then I would be like sitting at a loss.
Right.
So what's the right thing to do? I just, that's my question. Like sometimes just a natural reaction, like stock goes down and the next day like it bounces back. So my question is like what to do? Like, is it like good thing to like sell half or like?
Good question. I'm looking here at a couple different time frames. Good lift here. Here's the weekly chart. I'm going to refresh this to make sure it's accurate. Good lift. I mean, look at this. I like this in this respect. We're only 2 days into the week, and you've already got heavier weekly volume than last week. Now, I know last week was a holiday week, but it's a good start. It's a good start. Here's the daily chart. By the way, compliment you. Good job on the trade management. Well done. That's good. Good lift on this bar. Here's what I like to do. A lot of people always look at charts after the fact, and there's a perceptual bias that, oh, this is easy. Best thing to do, as I stated before, slide it back right here. I can see why you bought it, and it makes sense. Why? It lifted through tops, through clean and simple tops right here, and it did it on a big volume pickup. Perfect. Now what I'm going to do is I'm going to take it to the hourly. Here's the hourly from yesterday. It's going sideways. And I bet you, Simran, this is what you were looking for.
Yeah, I had a buy stop in at 16.
Yeah.
So I just kept my buy stop in. So that's why I was able to get in at 16.
Perfect. You know what's really good there? People talk with their mouths and vote with their pocketbooks. This is an hourly chart. Folks, look at that volume surge. And here's another good thing. You bought close to this line. You know, you're right here. You're in great shape right there. Excellent. Excellent. And again, I hope everybody sees this. Okay. So now let's move on. And it continues. That's great. Let's go to the daily now. Lifts up. And this was one thing that was interesting about today is we got a lot of this kind of action in the morning. This first hourly bar on heavy volume. A lot of the charts were very, very loose in the morning. The one saving grace was this, because you bought properly. And can I ask you, Simran, where did you add?
Actually, I think I had like 17.10 or something.
Okay,
today.
good.
I took like a lot of profit. I like sold like yesterday at like 18.20 and then 18.50, like right at the close because it was like closing on the topper end.
Yep.
And today, so I like when I was selling off, I sold I think like 16.65, and then like I was watching the market also, so the market was reversing. So I saw like a doji on the market, like on the SPY chart, and then I just like bought it back up like around like 17.10.
Good. Good. I can see why you bought it where you did. And there was a telltale sign here yesterday, right there.
Yep.
It tailed off and it closed down a bit on a pickup in volume. It's a 30-minute chart. Now look at the next bar. Look at the volume coming into it. Look at the selling volume coming into it. That's right there.
Yeah, I
Those are
don't
telltale signs, right? And so you acted properly. You acted properly. You controlled it. Here's the hourly. And again, there's some selling volume in it. You don't have a lot of cushion, but there's another moral to the story here, and I think it's important. You were buying at the right spot. Your first buy was around 1620, 1630.
Yeah, exactly at 16, I had my buy stop in. So I
Perfect.
got filled at like 1605.
Good, good. And you sold. Now, where did you buy more shares at, may I ask?
So it's the next day I like added at like 1710.
Okay, on this day right here, the same day?
On the next day, like today actually. Yeah, today, sorry.
Okay, very good. Here's one thing I would say is just be careful. And here's why. Looking at the hourly, it got really loose here. All right, this morning.
Yeah.
When you see action like that, be careful adding to it. because that was some heavy selling volume loose there. Normally when I see something like that, I'll lay low and not buy more shares. Okay, I'm not saying you're wrong. Please don't take it that way.
Oh no, actually, I bought it on that green candle. Like I was watching like the same, like you shared your chart thing, like with the daily chart and 30-minute chart. So I was watching it on the 30-minute chart, and then I bought it on that, like the next, on that green candle, like on the
Okay,
bottom.
okay, good deal. Okay, can I ask you one question? Good trade management. What would have been a better thing to see on this bar, this green bar? A little bit more volume. Now, but I'm going to flip that coin, and I bet this is what you were looking at. And this is why it's so important. People say, oh, it's a red bar, it's a bad bar. I've got a question for the team, for everybody. This bar right here, right there, is that a good bar or a bad bar? Why?
It's a bad bar because it opened higher and closed lower on heavy volume.
Okay.
It's good.
It's a good bar. It closed up.
Okay, good. Simran, good analysis. But here's the thing that's interesting. Notice this. Here's the close from the day before. It opens down just a bit and it drops way down. And that sucker closes in the top fifth of its daily or its hourly range. That's a good bar. They supported it. And here's how you know that it worked. Because by God, the thing went up. It pushed off. So on each bar, note the open, the high, the low, and the close. And if it's closing in the top, this was closing probably in the top fifth of its range. There's strength in that bar and it followed through. But I respect your trade management in that you're trying to get in at the right spot and you're making sure that you don't have any problems. That's good. Stick with that. Also, I wanted to share this with you, please, sir. And this is for all of you. I'm committed. I say this all the time, and it's the honest to God truth. I'd let you log into my program. I don't care. I don't have any other rooms open. I'm not surfing. I'm not looking at Fox News. I'm not looking at that crud. I'm not hardly on Investors Daily, investors.com. Right here. I've got the VIP room open. I've got this window right here open. I got my trading platform. I've got 3 monitors. That's it. That's all. And I ain't surfing anywhere else. That's simple. All right. I rambled too much there. Let's go on with, all right, Antonozzi, go ahead with a question, sir.
Hi.
Hello, how you doing?
Very good. Yourself?
Good. Good to see you. Good to hear from you.
My name's Patrick because I'm new to this, so I put my last name instead of my first name.
Well, Patrick, I'm completely unbiased when I say this. I like your first name.
Thank you. Okay, I understand. I read a bit Can Slim and O'Neill and all that, and I understand the breakout from a base. No problem. They used to say put 7 or 8% loss. You say differently. Okay. And I understand the way you're working and I like that. Where I have more problems is, where I have problems understanding is, for example, today you were saying, I think somebody started a position, or maybe I didn't hear well, but a new position was done at 6 or 7% higher than the breakout. I think it was on Williams Sonoma or Uber. I'm not sure today. Like you were saying, okay, you added, I don't know if it was an add-on or a new position at 6% over, yeah.
There we go.
Exactly. Whoops.
There you are. Yeah. Nice.
Okay. Right. Okay. Now, the thing is, this moves so much during the day. Well, usually like they move a lot. So if you, for example, you buy it and it's up 6%, and we say that below the line and like there's no line because it's in the air. But if you pay, for example, 118 and it's at 115, you're more than your 2-3%. I'm just wondering. It's hard to keep I'm losing power here. It's hard to keep a small loss when you're buying in the air like that. You know what I'm saying?
Good. Patrick, good question. And this is why, our first purchase was right in here. Okay. Not up high, down closer to here. And then 2 buys adding. But this is very important. If you noticed, each buy was only 20% more. So it was not like oh, I'm buying 100 shares and then I'm buying another 100 shares and then another 100 shares. No, if my first buy is X amount, and let's just use a number. My first buy is 100 shares. Let's just, for the sake of math, okay? 20% more, I'm buying 20 more shares. 20% more, I'll just buy another 20 more shares.
And sorry, I don't want to cut you off.
No, you go ahead, sir. Go ahead.
Okay, for what would be the price that you got in the 20? I'm not sure when do I start adding?
Oh, as soon as this extended a bit, and watch this. Here's the first one, and it's just going sideways, but it's hanging in there on the 30-minute, and it's also consistently strong on the hourly. After it's extended a bit in price, I will look at it. Excuse me, sorry. And if it's strong and the market's acting strong, if there's no hard and fast rule on that, I'll just buy 20% or 30% more.
Okay.
And here's why. It's proving itself on the daily chart, and the market's proving itself on a daily chart that I can buy more. And this is very important, Patrick, it's a longer base breakout. If it wasn't a longer base breakout, I would not be adding more, but it was. So
if I did not get in at the right price, then I would not start a position at 5-6% higher.
Correct.
Okay.
That is correct. Perfect.
Right.
Yes, it is. Patrick, you bring up a really good point. We have to buy right, sit tight. We have to buy at the right price. And I know you're good with this. Don't chase it. Don't chase price. If I don't get it at that price, I ain't going to buy it. I'm just saying. Okay. And the reason why is it opens myself up to further risk to the downside. You know.
Right.
So anyway, good question though.
One more thing. If I bought right, and I heard you say that somebody that wasn't in front of his computer during the daytime because he had a job, to put 1% and 2% sell beneath the white line, beneath the line, right?
Yes.
Okay, but if I'm in front of my computer and it's starting to go down 1%, 2%, 3%, 4%, that's where I have a bit of a struggle when to sell.
Okay, great question. Because our first buy was down lower and our previous next two buys, ensuing buys, were smaller. Our average price is still low. So we're in good shape where this can come all the way down into here, right in here. But because our largest buy was down here, our average price is still lower. So we're still in good shape. And we will make sure if this starts to drop down tomorrow, real world on Williams-Sonoma, if this starts to drop down tomorrow on Wednesday, we'll sell some. Why? Because I'm not going to let a good profit turn into a loss. I won't do it. I will not do it.
You would sell maybe at 20%, and as it's coming back to your initial price, you would get out at initial price, or you would get out a bit lower?
Oh, no. I will get out if it comes down all the way to here.
Yes.
Oh, I'm out. I will be out of all my shares, but I will take it out in increments, assuming it doesn't gap down. Okay. Yes. But if it starts dropping tomorrow and it's coming down to my average price or my second buy, I'm going to sell those shares off. Why? I don't have an ego with it. I'm wrong. And I'll just take it out. Oh, and that leads to another point for all of you. And I'm sure you do. Please, I don't day trade. Okay. I don't, honest to God, I haven't looked at a 5-minute chart. I know this year, definitely. I'm not scalping. I want to try to let these animals work as long as possible. But as I stated before, please stay away from the 5-minute charts. There's way too much emotion in there. And I know, Patrick, you're not looking at a 5-minute chart. You're just asking the question like, hey, I bought this. I just want to make sure that I don't get in trouble with it. And because we bought it right and pyramided properly, we will not get in trouble with it. We will not. We will manage it.
Thank you very much.
Oh, yeah. I hope that helps you.
So much. Very, very, very nice. Thank you.
Yes, sir.
All right. Randy wants to know if you got a stock that's breaking out, you buy it on the breakout, and it reverses down on you, and you end up selling it, flatten your position, and it comes back up through the breakout. Is it buyable?
Great question. Yes, it can be. but this is a very, very important constraint. I'm going to say that it goes up and it breaks out on heavy volume. And then it reverses and goes back down. If it reverses and goes back down on heavier volume going down than it did going up, I will be very careful and hesitant to buy it again, to rebuy. Okay? Because that was met with selling pressure. The only way I will buy it back is if in one of those 30-minute or hourly bars, there is a huge volume surge, heavier than the selling volume bar with good price action, then I would buy it back. If it doesn't have that, I won't buy it back. I'll just leave it alone. Which leads to another point. I make sure that I don't argue with it. And I know none of you would, but I'll just admit something's wrong with this stock at this point in time, and I'll leave it alone. And that leads to another point too. As I said earlier, no vengeance trading. I remember years ago, people say, I'll clean it. I won't say what people say is, I don't care what it, I'm going to buy that sucker back and I'm going to make money on it. What? It's not a living entity. Move on. Just move on. It's just chart. It's just a chart. It doesn't know me. It doesn't know you. It doesn't know we exist. We just manage it accordingly. And just, this is what I said all the time when I was doing outdoor survival skills. If this, then that. If this happens, we do that. That's simple. And it really makes it easy. It lessens stress. It systematizes our decision-making processes, which then allows us to make better decisions. Oh, look at that. Okay, I guess I have to buy more. Or, oh, it's dropping and volume's heavy. I think I should protect myself. I'll sell some. That's it. So I also have to share this with you. And maybe you think this is corny, but I got to bring it up. Please don't drink a whole lot of caffeine. I know you're going crazy. Just don't drink a whole lot of caffeine when you're doing this, because you can get so jacked up that it's not good for you. Now, do I drink iced tea in the morning or yeah, I have a little bit, just not, I don't drink coffee. Okay. It's just me. I know you can say, really? And I also want to share this with you too, is I said it before and I'll say it again. Please just take care of yourselves. I really encourage you that I hope that you can get away from the machines and go exercise. Please don't make an idol of this. Like, man. No, strive for balance in your life. And I know you can say that doesn't have anything to do with stocks. Actually, it does. It does. It's good. You know, I've had long talks with Owen. Man, I was getting to the point where I was going so much. And he even said, hey, you need to get out of the office a little bit, man. You know, so it's what we do. Balance is a good thing. Anyway, Owen, go ahead. I'm sorry if I rambled there.
You want to touch briefly on gains. Jaron asks, what constitutes a good gain?
Good question. A good gain, I don't want to sound like a smarty pants. Any stock where I've got a decent profit in is a good gain. Now, I'll temper that because that sounds like a really cute answer. We're not doing this for freaking 50 cents or $1. Okay. I want more, but if it's all that it's going to give me, I'm not going to lose on that either. All right. I'm really hung up on keeping the losses small, but what's a good gain? I got to tell you, I'm really happy if I get 25, 35, 50% on a stock. I think it's great. I'll let them ride as long as possible. And as you all know, I got to show it to you. Stuff like this, buy. Oh, excuse me, down here. I mean, 16. There you go. Buy right and let the suckers work as long as possible. And I've had stocks, and I think there's some VIPs in here. I've had stocks. I don't even have them on my front page anymore. I don't even have them on my front page. They're gone. They're on my second page. See down here? Oh no, you probably don't see this because you're just looking at the chart. I've got Pat and then I've got Pat 1. I know I'm really original. Okay. What's Pat one? Those are stocks that I've got. You know, just let them work. That's all. So anyway, how about another question? Let's hit it.
Okay, I just want to acknowledge this one. Scott asks, how do you build the key list and how do you build the nightly key list? And I think that is something that's too much to deal with in this scenario. Let's not go into that right now, but I think maybe you could build a video on that.
Sure. I'll
Okay.
make a note on that.
And then somebody asks, what's a good alternative to Ensign for a Mac? Ensign doesn't run on a Mac, but you can run Ensign in a, what do you guys run for Macs? It's some kind of an environment that allows you to run Windows programs. If you run that environment, I forget what it's called right now. I'm not a Mac guy, but if you run that environment on, yeah, it's a virtual machine, but there's actually a name for it. I forget what it is. Parallels. That's it.
Good work.
That's it.
Good work. I like that.
Okay.
Yeah. I use Ensign Software. Why? I find it clean and simple. I love the charts. I've used it for this century. How about that? I've used it for all of this century and into last. So it's just a great program. I'm used to it. But let's do something. I'll ask you, and anybody can volunteer. Because see, this is the power of a group. This is the power of a team. All right. What real-time charting software do you use and do you like it? I'm going to ask you. And I'm not trying to put you on the spot, please. But anybody want to volunteer and say, hey, this is what I use and I really like it? I'd love to hear from you. You'll help everybody. Anybody? Just toss it out there. Don't think you got to raise your hand. Just
Okay, so Thinkorswim runs well on a Mac. MarketSmith is awesome. TradingView and MarketSmith. TradingView is a little clunky, but still learning it. A couple people are talking about Thinkorswim. I'm a Thinkorswim fan. I like their charting. TradingView, TC2000 and TradingView, Interactive Brokers. For charts, Interactive Brokers. Been on MarketSmith and Street Smart from Schwab. Okay, Street Smart. I remember that program from quite a few years back. That pretty much covers them all. Street Edge is free with Schwab. HGSI.
yeah.
I think I'm familiar. TradeStation. You put enough people in a room at trade and all of a sudden you've got the whole list of everything out there, right? Everybody uses something different. And most of the time they love it. It's just what you get used to.
That's it. That's awesome. Yeah. Hey, thank you all for sharing that. I wasn't trying to put you on the spot, but again, somebody might bring up something that I don't know about, we don't know about. It makes us all better. And that to me is the usefulness of a team. All right. Is it takes a team to get the ball over the goal line. Same things here. All right. Or put it in the goal, whatever. Put it in the basket. So that's good. Thank you for your input on that. I appreciate it. Any other question there, Owen?
I think we're getting down there to the wire. Mark wants to know about pyramiding. He says the first purchase is just half a position. If you want an ultimate to be $100,000, then your first position is 50, and then you make additional buys during that same day. Well, he's asking, do you make additional buys that same day to get up to 100K?
Great question. Yes, I'll be really specific there. We want to get up to $100,000 in a stock. First buy is 50,000. Second buy is 30,000. Third buy is 20. And I do stress, please, only pyramid large, only, and put a large amount of money in a stock that's coming out of a long base breakout. All of you are VIPs, and you've noticed I really dramatically have cut back on pullback setups. All right. Here's what I found. People like clean and simple. They like the base patterns. I'm really focusing on that for you. And you know what? Seriously, they have a great success rate. They have a higher probability success rate. That's what you like. That's what we're sticking with. That's what I like. I'll tell you that right now. You could say, Pat, what would you prefer, a base breakout or a pullback? Give me a base breakout any day of the week. Any day of the week. In fact, I'll say this. I'll bet you I've made 90% of my money, maybe 95% of my money off base breakouts through the years. You can say, oh, this year? No, in my lifetime. So
Speaking of base breakouts, how long do you like to have those base breakouts be? How long do you like the base to be? What's your preference?
anything that's 2 weeks or longer. Okay. I'm really looking like right here. This is about 2 weeks. It's simple. And this is a great tactic. I want to share this with all of you. This is huge. This is real world. We did this. Good. Just connect the tops. Now, leads to an important point. Does it need to be perfectly flat? Nah. No, just connect the tops. It's clean and simple. You can draw it with a darn crayon, but don't do it because it'll really mess up your monitor. Okay. And then what does it do? Right here. Just advance it. Boom. And this is what you want to look for. When it pushes through that line, you know what I'm going to say. Look for volume surge. People talk with their mouths and vote with their pocketbooks. On this bar, the stock did 89 million shares. On this bar, 214 million shares. They bought the tar out of it. They're voting, which leads to another point for you too. Don't buy it up here. Get her in here. It's pushing through the line. Volume's heavy on the daily. It's heavy on the hourly or 30-minute. Buy. You're in. I love that. Which I can also share this with you too. Some of you have jobs away from this. You focus on the clean, simple base breakouts. You know what you can do? You can put in a buy stop. Now, this is where it gets really good. I'm going to go to graduate level trading. If you put in a buy stop to protect yourself, put in a contingent sell stop. If your buy stop is triggered, your contingent sell stop becomes active, and that can protect you too. I love that. Anyway, I wanted to share that.
Let's close with this. Simran wants to know how you handle stress. Do you follow any routine, either before the open or whenever, in order to maintain composure?
It's a great question. And heart disease runs in my family. Okay. I've carried a lot of coffins in my life already. And so I've outlived my dad. I'm really big on controlling stress. And this is the most sincere thing I've said all day. So here's what I encourage you to do is work really hard, work really smart, and stay focused. Don't drink too much caffeine. Don't take any other stimulants. Please. These are, I'm not telling you what to do. I'm just encouraging you. Don't smoke. Don't smoke. And get up and periodically walk away from the computer screens and go in another room, walk around the house. Just get away from it. If you've got serious issues going on in your life, quit trading or investing. Years ago, one of my best friends was diagnosed with cancer, and I had to quit trading. I had to quit trading at that point in time just to gather my thoughts. It was very, very important to me. And I was with him the night he died. So, and he was young. So take care of yourself by exercising, walking, get the heart rate up. And I'll tell you another thing. Don't, and you're talking to a guy that's been guilty of it, please don't be looking at the charts right before you go to bed. It'll screw up your head. Don't look at the dang computer screens right before you go to bed. And by the way, you're speaking to the guy, I've broken all these rules, okay? I have. I've been there. If you look at the monitor, it's been proven you get agitated and you start thinking about it and you don't sleep as well. So get away from it. And I'll tell you something else that'll really help you. I said exercising, and it doesn't even be hardcore exercising. Years ago, I was registered for the Ironman, okay? So, we were pushing the envelope. But exercise, go for walks. Man, it's proven. It's great for you. cut back on caffeine. Make sure to get plenty of rest. Okay. Something else I find that really helps is read books that aren't stock related. Read good novels. That helps you. And, maybe this is going to irritate some of you, but I'm going to say it. Pray. Yeah, I pray. And I'm not doing that. Please don't think I'm somebody, I'm holier than. Oh, no. Oh, no. Folks, that's true confession. I've had a gun pulled on me a couple of times. Okay. And it wasn't because of me. I was in the wrong place at the wrong time. So pray. Just pull back from it. Pull back from it. And it'll help you. It'll really help you. I guess I'll take this one step further, and maybe I'm rambling too much. Don't make an idol out of this. I did for a while. And just be thankful and humble. Focus on great stocks. And that's why, folks, I'm going to be brutally blunt with you. Let's lay the cards on the table. You hired me, right? You hired me. And my job is to find great stocks for you and help you manage them. That's why you hired me, and how to control them. And that's what I do. I want to see it grow, but I also want you to strive for balance in life. And I also encourage you, get away from it some on the weekends and spend time with friends and family. The Lord blessed me with 4 kids. All right. And because of COVID, for the first time in their lives, I didn't see 2 of my kids over the holidays. That makes me really sad. Really sad. One of them's 31 and the other one's 23. I didn't even get to see them. And it's not a pity party. It's just that soak up the time that you have and contribute to somebody else's life. It's very satisfying. So I didn't mean to get off on a tangent. Maybe you think I'm being corny here, but I'm just being brutally honest with you. Is from a guy who's broken a lot of the rules. It'll help you. It'll enrich your life. It'll enrich your life. So I read this quote years ago, and to me it was very convicting. If you don't think you don't have any idols, think about what you lose sleep over. Those are your idols. So just work for balance. And again, I love working with you. I love working for you. And let's have some fun with it. Let's enjoy it, which is another reason I love the room. For me, it's quite therapeutic. To be honest, you go, really? Yeah, you know why? Because I feel like I'm hopefully helping people, but we have some good laughs too. And I want that. But am I serious about this? Oh, I'm real serious about it. Real serious. But we enjoy the ride too. Anyway, I'm sorry if I went a little long, but it's an important question. It's a really important question. So anyway, I hope I did it justice. So I thank you all. I thank you all for being VIPs. Simple Bill, I see part of it. I can't really read it. I'm sorry. You're good there. No, I thank you all.
Therapeutic, I send you the bill.
Oh, there you go. I love it. That's great. No, hey, thank you all for your time. Thanks for being VIPs. And know this, I really mean this. I love working with you. It's fun. And I say this, I type it. I take your questions very seriously. I will never steer you wrong with an answer. Does that mean we will never have a loss? No, but when you're asking a question, I'm giving it serious thought. So it works. I enjoy it. I find it quite invigorating, to tell you the truth. So anyway, I thank you all very much. Have a good, safe night. Let's make this a good year. All right. We're going to keep looking for them. I love this. I love the challenge of it. So we'll do it. But have a good, safe night. I'll be working on a key list for you, and we'll turn it up a notch for tomorrow. How's that sound?
Sounds good.
Sounds good.
Thank you all very much.
Everybody. Thank you.
Thank you.